let's say you've taken every deduction that you could take. You could say, hey, and remember, this is the next year. You're doing your return in March.
Mm-hmm.
You could say, hey, I want to put money into a SEP, 20, 30,000 to a SEP, and you could take that deduction on your return on your schedule, if you have a single member on the Schedule C, for that year, even though the year passed.
Just
Okay.
by depositing
It's a loophole
in the SEP.
Yeah, so a SEP. So if
So
you
instead
didn't
of paying the IRS 20, you're paying yourself 20.
well, you pay, but when
Well,
you take when you take it
percentage.
out the SEP, you get taxed.
Gotcha.
So it's like it grows with the market, though.
Yeah.
You get what I'm saying?
So it's the perfect hedge.
So it grows with the
It's
market.
kind of like a 1031 if you
Yeah.
kind of right. Similar
you-
as because you're pushing the tax liability further out.
Well, you're putting it into a SEP.
Yeah.
Now there's risk because the market could go sour.
Right.
But if it
Gotcha.
goes well, you basically make out.
And you're covering it.
Gotcha.
And you're covering it. Speaking of which, this would be great to kind of take us on our descent here. Give us your favorite tax loopholes.
Favorite tax loopholes is the
Because
SEP.
that one's a pretty good one.
That was one of them.
Absolutely.
The
That's a good
SEP.
one.
It's a really good one, actually.
Yeah, the
And
SEP.
you can only do that under the business.
Yes,
So if
under
you
the
How
take
about
the-
the business owns real estate? Can you do that?
you can. Yeah.
Okay.
Yeah.
But is it only the business portion of that like for a mixed use unit, and you have a multifamily with 3 units up top and a sneaker store at the bottom?
Mm-hmm.
Can you only take that based off of the sneaker stores?
Well, no. Well, if the business
Revenue?
okay, and this is something important to know. Some people have homes. They say, "Oh, this home is owned under the business," and it's not really owned under the business. The deed of the home's in the person's personal name.
Right.
Unless the deed is in the business name, is not owned by the business.
Got it.
Okay. So let's say there's John Soto Consulting, and the deeds of his properties in that business, and he has a candy store in that business, and he could take the proceeds from that business if he has a liability issue and put it in a SEP and take that deduction.
So it's whatever that LLC essentially, or that your provider produced revenue wise,
And they have
or
they have to really be owned by the LLC. Because people do that. People do that, and it's like this home is actually not owned by the LLC.
right.
So why are you putting it on this form?
way.
Yeah. So the SEP is
It's a pretty good one.
the SEP is a great loophole. S corps are a great loophole because
I wanted to ask between LLC and S corp, but yeah, go ahead.